Let's stay on the market theme now, get some insight and analysis from Alan Nuckman of Agora Financial, where he serves as the chief market strategist. Alan, thanks as always for joining us. What say you on this Tuesday? What's been top of mind for you as you watch these markets?
Well, first of all, before we even talk about what's top of mind today, we need to talk about last week. That recovery rally that we saw last week after some profit taking on Monday was another example of the bull market boom that we're in. So you saw the sell-off, but more importantly, you saw how the market's reacting. We quickly erased that drop from the top, making new all-time highs once again. And that projects much higher if you just use that measurement of that V recovery, 4550 in the S&P and 15,500 in the NDX. So those are our first technical targets, and it's impressive to see the markets rally back that quickly.
I just mentioned we saw some economic data that crossed durable goods for June. It's always a pretty choppy number, and I suppose some will say, oh, you see, it's lighter than expected, so this growth story is stalling. But it is showing growth. And I guess that seems to be where the constant bull-bear debate plays out each and every day in the markets, is the pace of the recovery.
Right, but I'm a price action guy, and looking at the price of a lot of these markets, it's been a very impressive recovery. But what happens is you see stocks switch and rotate from hot to not and then back to hot again. And so I know we're going to talk about the China story, but I think that's kind of the theme, that you're seeing this constant rotation. Earlier in the spring, it was the Dow, and then it was the NASDAQ, and the NASDAQ was down 10%. Everybody was worried the market was over. Now the NASDAQ's come back. So this week is all about earnings. We've got Apple today, and it's expecting a 4% measured move based upon the options market. So Apple's right back up to its all-time highs, but it's really interesting that Apple had last made highs last January when they had their earnings. And then they kind of stalled, and they were out of favor. So that's an example of the rotation. You've got to be able to take advantage of it and find the stocks and the sectors that have value that aren't participating, and get into those because you have better risk reward.
Well, Apple, and we're taking a look at that stock price. We just did a preview of what to expect with the numbers themselves. Obviously, a company that is very tied to the China story, which you alluded to. As a U.S. investor, what have you made of some of those headlines on the crackdown coming within China?
Well, I think that's another opportunity. I play the long game. So when I'm trading options, I'm looking 3 months, 6 months out. And so I often have a mantra that things look bad enough to buy, because it sets up the risk reward in your favor after some sell-offs and after some pullbacks. So looking at the China story, that's kind of what I'm seeing. And if you look at a 5-year chart in China, it's very highly correlated, their market, to the S&P. Now, that disconnected last March. Now, will it reconnect? Right now, China, in the last 52 weeks, if you look at the FXI ETF, is essentially unchanged, maybe a little bit negative, whereas our S&P is up 30%. So I'm looking to see if there's going to be a little bit of a rubber band snap back. And I think some of those stocks have some value. A good play that we've gone back and forth in is WB, and that hasn't been hit that hard in comparison to some of the Chinese stocks, and had that big breakout. Now it's come back to that breakout area. So that's how I like to set up. And see if that sector, if everyone gets overloaded negatively, that you could set it up for a big bounce.
WB, Weibo, the social media platform, I believe you were referencing there.
Right.
As the options guy, to give our audience an actionable idea, one area that you're keeping an eye on is gold. Give us a sense on how you're strategizing around that.
Well, again, gold has been kind of forgotten about, and it is a not hot market right now, hovering around this 1,800 level, but it's holding pretty well. So the way I'm looking to play gold is through NUGT, which is a 2x ETF for the miners. Now, NUGT's trading about 56.50 or so. So what I look to do is use options as a vehicle, a stock substitution strategy. Instead of buying the stock, I'm buying an in-the-money option that's going to act like this stock. So I'm looking at the September 50 call. It's trading for about 850, and right now NUGT coming in today was about 56.50. So it's deep in the money. Now, this ETF has been trading between 55 and 60 now for a month, so that target's a breakout to 65, and there's some gaps up above. In the bigger picture, gold in this nugget has been trading between 50 and 80 in 2021, so that puts 65 again as a midpoint target. And the one-year low in this is at 50, so I'm buying. I have the right to be long at 50. So again, it's about risk reward, it's about value, and looking for it to respond when the sellers are running on a strength.
All right, NUGT is the Nugget ETF, which gives you more exposure to the story of gold. We'll see how things play out. Alan, always nice to have you with us. Appreciate your time this morning.